We don't have to be smarter than the rest. We have to be more disciplined than the rest. And that's what we do here every day at chartingwealth.com. We chart the stocks. We use the rules that we have set up. Why? Because the rules work. This is not rocket science. This is charting art. And as we look at what goes on, we can see weekly vertical crossovers on our charts that work time and time again. As everyone who's been listening for a while knows, we employ Occam's razor, which says the simplest answer to a problem is always the best. We do not suffer from something called analysis paralysis. Why? Because we've set up rules that we are disciplined and follow. We look at these markets every day, 10 to 15 minutes. That's all we ask from you. It's showtime. What do we see going on in the market? We see the S&P 500 and the NASDAQ 100 up for the day on Friday. Still, though, down candles. We'll talk about that more in a minute. We see 20-year bonds down for the day, up for the week. We see gold up for the day, and sort of a strange week in gold. After 3 down weeks, we have a bit of a pullback, a green spinning top. We'll talk more about that in a couple minutes. First, let's jump into the S&P 500 up 0.48%, our biggest up ETF for the day. Now we have a red spinning top for the week. Oh, really sort of a hammer. What we see is a lot of movement on that bottom wick, a lot of downward movement that has been lost. Things retracted there. We see a bit of a wick on top and then a red down candle moving through. Of course, the weekly trend line. Weekly trend is still up, although for the first time in many months, many months, going all the way back to the end of this prior year. First time we've seen the price percent oscillator heading down. Now it's still a ways away from the red signal line, hasn't crossed over yet. First time in many weeks that the derivative oscillators lost energy. So a pullback, and significant enough that it pulled through the weekly trend line, and as we go to the 2-day chart, pushed over and through our 2-day trend line and did that at the end of the prior week and continued consistently Monday, Tuesday, Wednesday, Thursday, and of course the first day of this latest candle are all down moves. Derivative oscillator gaining downward momentum. Price percent oscillator cooled out a little bit so far, first day of this latest 2-day candle, not going down at the same strong angle it had been over the prior 4 days, but again still moving down. We see we're on Monday, Tuesday, the 2-day candle blasted through the weekly trend line. So again, stronger downward pressure on the S&P right now. Oh, and you know what's interesting? If we look at the quarterly chart, now those of you who've been following us long term, our Patreon members have all of that special training. But look at what, even with the up move that we've had so far this quarter with a big green up candle, price percent oscillator is still slowly pulling away from the red signal line and the derivative oscillators heating up. If you guys recall, we had a crossover going down at the end of the year. Our first quarter ended up as a down candle, as we can see, a red spinning top. This second quarter of the year is shaping up to be a green up candle, but again, downward pressure is still on the market in our biggest of all charts. So pay attention to that. We go to the 4-hour chart. What do we see? Down movement in the morning, bit of a pullback in the afternoon, sort of a green spinning top with lots of upward movement on that wick. Derivative oscillator losing downward momentum. Price percent oscillator is heading up at this point after many days of down movement. We'll see if it crosses over the course of the next week and heads back up. Big thing to keep in mind is, of course, our weekly chart still in a confirmed up move. 2-day chart's a confirmed down move. 4-hour chart still down. So we'll see if this is going to be enough of a pullback for the market to turn back around, or is it going to continue on, and will we end next week with a weekly vertical crossover going down? What we know at this point is we are not in a trade with that 2-day chart rotating over going down. If there's a big up week over the course of this next week and the 2-day chart moves back over into an up direction. That could give us a jumping in point potentially for an up trade, but there's been a lot of down movement for 5 days. We'll watch and see what we have to see. Okay, that's where we are on the S&P 500. Next, we move to the Qs, the NASDAQ 100, the tech sector. What do we see going on there? Very similar to the S&P 500, those big 500 companies. We see the NASDAQ pushing through the weekly trend line. We see the price percent oscillator for the first time since the end of last year. It is actually heading down now toward the red signal line, and the derivative oscillator for the first time in weeks has started heading down. So we'll see where that leads us, still in a confirmed up move on the weekly chart. So the big trend still up. We look at our 2-day chart, looks about the same. Push through on the Monday, Tuesday candle, down further on Wednesday, Thursday, and down the first day of the latest candle on Friday. Derivative oscillator gaining downward momentum. Price percent oscillator heading down pretty much the same as it has been all week, unlike the S&P 500, was a bit of a pullback from that strong down move. We see the market down in the morning, spinning top in the afternoon. Price percent oscillators heading up a little bit on that 4-hour chart derivative oscillator. So are things going to bottom out somewhere around the 182 mark? Could be, or could just be waiting for more significant down moves. Same thing holds true with the NASDAQ 100 as with the Qs, waiting to see how things are going to shake out, either on the weekly chart crossing over going down, or on the 2-day chart crossing back over going up in the same direction as the weekly. That might allow us for further up moves. Don't forget, typically a summer low in here somewhere could be where we're heading, but we don't have a trend yet to follow. So guess what we do? We wait. First rule in investing: don't lose money. Second rule, don't forget first rule. And again, we have rules not to lose money, as well as rules to make lots and lots of money, to set up your own virtual printing press. That's what we're talking about. So let's keep moving through these charts. You want to know more about what we do, don't forget to buy our book. See a link in the show notes. We're coming into our 10th printing. I just sent out the last of our books today. They are all gone. But guess what? More show up Monday. So go ahead, place your orders this weekend. Wherever you are, we'll get them out to you. If you happen to live overseas, I encourage you to email us, cw@chartingwealth.com. We'll get your book out to you. We'll send you first an invoice, pay that. We'll get your book out to you. Everybody in the States, follow the link in the show notes to purchase the book. Now, let's keep pushing through these charts. We're now in 20-year bonds. And what do we see happening there? Up week after a prior not so strong up week. This latest one is up. Now don't forget that the bonds started moving up all the way back and November 30. That's when we had our last weekly vertical crossover. They've gone up for a while, sideways for a while, up for about 3 weeks, and then sideways for the last few weeks. We see the derivative oscillator slowly pulling away from the red signal line. Price percent oscillator slowly pulling away from the red signal line. Derivative oscillator at the end of the week is still negative. So not all that much up movement as far as our indicators go. Look at the 2-day chart. It crossed over going up back on the 7th. So we saw after that 2 days of up movement, and then really a sideways slide since then. We look at the 4-hour chart. That's where you really see things. They pretty much topped out there in the afternoon on Tuesday, and since then really been sliding sideways. Up some in the morning on Friday, down in the afternoon. Price percent oscillator heading down. Now that's not necessarily bad, because we're waiting for a pullback, right? We just had the 2-day chart rotate over. We're not going to jump in and try to pick up a falling knife. We're going to wait and see a pullback occurs, if indeed that happens, and then rotates back over going up on the 4-hour chart. That's our trigger point. So now that we have both the 2-day and the weekly moving in the same direction over the course of this next week, we'll see if there's a pullback in the opposite direction on the 4-hour chart. Once it rotates back over going up, that's when we pull the trigger and do a practice trade jumping into an up move on 20-year bonds. If they do that. And if they don't do that, guess what? We don't do that. We let the charts lead us. It is a chart thing. It is not gambling. It is not speculating. It is not crystal ball reading. It is following the rules. And people always say, why don't you follow the rules? Because the rules work. They work, they work, they work. Do they work all the time? No, it wouldn't be any fun if they worked all the time, would it? Would it? But they work almost all the time. And again, that element of chance in there where you've got to use your skill against everybody else. And you got to be brave enough to do the right things, even if it means pulling a trade when it's not going in the right direction. That's the skills you develop. People say over and over again, what does it take to be a good investor, a good trader? It takes guts. It takes some knowledge and a lot of guts. And guts is obeying the rules, even when you don't like the rules, even when you don't like them. So let's keep moving through these charts. We're now going to our last chart. Gold. You guys remember we had a weekly vertical crossover the week ending the 29th of March. Following week, we had a down movement, sideways slide the week ending the 12th of March, then down the week ending the 18th and the 26th of March, and then down the week ending the 3rd of May. This last week, bit of an up week. I mean, it's really ended as a green spinning top, almost a doji. Lots of indecision tending up, pushing through our decent weekly trend line and enough movement. Now we're still negative in gold, okay? Still, derivative oscillators still negative also, as is the price percent oscillator. But our 2-day chart crossed over, going up, pushed through on that 2-day candle representing Wednesday, Thursday, pushed over, going up. And of course, we redrew our blue 2-day crossover line. And this latest candle, first day of the latest one, is another up candle. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. We'll wait for that candle to finish drawing on Monday. 4-hour chart is still heading up. Now, there was an up movement in the morning, bit of a pullback in the afternoon, up for the day, 0.19%. We've seen that 2-day chart heading up, 4-hour chart heading up since Friday afternoon, the 3rd of May. So again, we'll continue to watch and see how gold shakes out, how long this upward pressure continues. We're still in a confirmed down move on gold, though. We had sort of a sideways slide occur that second week after gold crossed over going down. That might be what's happening now. Gold closed for the day at 121.43. So we'll continue to watch, see if it's going to knock down somewhere around that latest low at 119.50, something like that. Is that going to be a floor for us, or is gold going to move further down? We'll wait and see how that shakes out over the course of this next week. Folks, it's been a great week. It's always good to be with you. We so appreciate your feedback. We appreciate all the book sales. That helps fund us here at the channel. I'm working on some special lengthy training that we're going to do. It's going to be actually a 3-month training course. We're going to do all that we can to provide you with everything possible. We talk about where the world is right now, stock market reaching all-time highs, and everything that goes up must come down. And there's all sorts of money to be made on the way up and on the way down. Stock market could go higher. We're all for that. We love riding uptrends, but we also love riding downtrends. And people say, wait a minute, how do you make money when markets are crashing? Well, we've got a great training for you. I'm going to put at the end of the video today, inverse markets, how to make money when markets crash, inverse ETFs rather, how to make money when markets crash. I want you to have that. I want you to be thinking about what you're going to do in the next big pullback in the market. Are you going to be ready to do these practice trades with us and to watch it as it occurs? It has happened many times in the past. Gold may be something that we see shoot up through the roof. We may see something good happen with bonds, as far as bonds really gaining. We also will probably see stocks, both the S&P 500 and the NASDAQ 100, pull back significantly. Is that starting right now? don't know that. We'll continue to watch and see what's going on. Has the stock market topped out? Don't have anything to tell you that that's occurred. We can see that there's a bit of a pullback, but once that weekly chart rotates over going down, just like it did back at the week ending the 12th of October, went down for many, many, many weeks. Nice big gap there between crossover and the next jumping in point. And that's a wonderful opportunity to do an inverse trade in something like CH, which is an inverse fund of the S&P 500. It's the ProShares short. And in fact, what's so interesting is it went up during that time period pretty significantly. Why did it go up? Because it's an inverse fund. And in fact, it's set up to percentage-wise, not the same price, but the same percentage change in price that the S&P 500 goes down, it goes up. So got a couple of choices when the market starts to crash. You can get out, take your money, put it to the side, buy everything back cheaper, or you can actually take your money out, put it in an inverse fund, ride it up as the market goes down, and then buy everything back in the market cheaper. We're going to be talking about a lot of that in the coming months, a lot of that in the training. I hope those kinds of thoughts get you excited about your virtual trading and the stuff you're working on right now. We talk about this all the time. We work on this every day. We want you to be with us. 10 to 15 minutes is all we ask. Thanks for being with us. You want to support us with the Patreon sponsorship. All sorts of great stuff there. Free training, short chart training, Bitcoin training, quarterly training, all sorts of special question and answer sessions once a month. Depending on your level, we give you a free 15-minute personal phone call. You name it, it's all there. Check out the link to our Patreon sponsorship. And in the meantime, buy the book. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.